Microsoft is popping on earnings. Beautiful move on earnings here. The stock again closing yesterday around 130, 330, 332. It's trading at 346. So right off the bat, stock is up. What do? I flip over to my next biggest time frame. I'm going to use the daily. Some people can use the hourly. That's okay too. But what I see here on the daily chart is we have a lot of support down here, right? So there's a lot of support at 310, but we know the stock is trading right up here at 346. All right, so now I'm looking in this upper range, and I'm trying to see, okay, well, what's a level up in this range? Is there a level up in this range for a day trade? Now, on a swing trade basis, we can touch on that in just a second, but let's focus on the day trade side first. All right, so the first thing I would do here is take my cursor and see there's a gap fill right here at 350. Okay, now, this is the kicker. So right here's a gap fill, and we draw that trend line across at 350.5. Now, a lot of you guys may say, well, look on Google, that was a good day trade on the long side, or Gareth says that it could be a good day trade when it gets down to that level. So why wouldn't this be a good short at 350? Now, again, this is where all levels are not created equal. The first thing is that yesterday after market, you already traded up here. You were already at 350 yesterday in the after hours. Once a level hits, even if it's after hours, it doesn't have the same staying power. All right, this is important, folks. Most people say, oh, well, all gap fills are created equal. Incorrect. Then they say, well, it doesn't matter if it hit it 10 times. That levels, if Gareth says it's a level, no, that's incorrect as well. Levels, just like doorways, have a kind of a breaking point. And the more you hammer a level, the more likely you are to have that level fail. Think about it like this. Here's a doorway, right? And this is my analogy, is my famous analogy. And I need my cat or whatever, the house is burning down. This is my door, right? And I ram it once. I probably am, even at my size, I'm probably not breaking the door down in one hit. But if I hit it more and more times, eventually the probabilities of me breaking that doorway down increase. And eventually it does break, right? I mean, even someone that's super weak, you hit it 100 times, 1,000 times, eventually it's going to break. It's just the stress on it is going to occur. So you have to understand that, folks. And this is why, again, a lot of people lose money in the markets trading because they don't understand the metrics. And this, again, is taught in the Winning Trader series. I'm giving you guys a hardcore school today, by the way, on technical analysis and understanding charts. Okay, so in any case, going back to the chart, 350.5, high risk. Maybe it works, maybe it doesn't, not for me. If, however, we rally up somehow to this double top high, then yes, that would be a shortable level today. More extended, remember we talk about how extended. So here, it's extended here, but we know it already traded there after hours. It's trading relatively lower, just below that now. If it were to go all the way up here, holy cow, that's extended. Think about that rubber band getting stretched, boom, snaps back. That's what we're looking for as a day tradable opportunity. Higher reward, lower risk. We know that, again, this will be our stop point on any, if you're using the 10-minute chart confirmation above it, that would be your opportunity. Okay, now, let's go to the swing trade side of things. Let's flip over to the weekly. Now, notice I'm going to the bigger time frame. Now, this is a classic educational piece again, guys. All right, now, the next thing I want to do on this chart is look at the weekly chart. Now, the weekly chart is very clear to me, and this is something that I've used in these game plans and we talked about. In fact, remember on the 10-year where we had that topping tail? And the topping tail, I said to you, it is in play, it is a top until it's proven otherwise. If you get a close above that, it gets negated. It ultimately, on the 10-year, it did get negated, and then we hit the next resistance at 5%, and now we're pulling back. Now 5% is the top until proven otherwise, right? So it's very much a stepping stone in technical analysis. You basically go with the probability until it's proven incorrect, and then you switch it to the next probable scenario. It's just rolling it down the hill, essentially. Okay, my point here is this. This candle right here, and I'm going to zoom in a little bit more because I want you guys to be able to see this. All right, see this candle right here? That is a weekly topping tail. Clear as day, right there. So, on a swing trade basis, you can short Microsoft, and I may do this myself with members. If it gets up into this high pivot, right around 368, it looks like, 367. You can short this at double top using the weekly topping tail. But this is the kicker. Let me ask you guys a quiz question. When does that topping tail fail? Okay, think about that. When would you stop out? If you shorted at this high here, when would you stop out of that trade? And the answer is pretty simple. It's when you get a close above it, just like with the daily chart of the 10-year. But this is a trick. Would it be a daily close or would it be a weekly close above that? And the answer is, what time frame are we on? I said we're on the weekly time frame, right? So if you're on the weekly time frame and you're using a weekly candle, then you do not cancel out the topping tail until you get a weekly close above the topping tail high. Do you guys understand that? Super, super important. These nuances are like gems. All right, so again, that's a shortable swing trade. I will probably be looking to short it at double top, and then I'll keep that stop on a weekly close above that high of that tail.